Greed is a part of human nature. It's not just the top 1% of people that are greedy. Everybody has some level of greed. When a banker sells you a mortgage for a home that you can't afford, that way they can get a big commission check, that's greed. When you list your home for sale for $300,000 and then you get two offers, one for full asking price at $300,000 and one above asking price at $315,000, and then you take the one that's offering you more money, well, that's greed. And when you buy a tub of guac for your friends, but you take an extra scoop of guac for yourself, well, that's also greed. And it's delicious. There's different levels of greed, and greed is good to an extent because it forces you to be more productive and work hard and have a career that's going to allow you to take better care of yourself and your family and your community. But when you mix high levels of greed with high levels of debt, well, now you're going to see periods in the economy with big profits and booms in the economy, but that also leads to busts in the economy. Take a look at this 100-year chart from the Dow Jones. In the late 1920s, we saw this huge run-up in the stock market until ultimately September 29, when the bubble burst and we were in a downward bust period until 1932. This was the Great Depression. Then fast forward to the boom of the late 1960s, which ultimately led to the bust because we had the oil crisis of the 70s, we had the inflation crisis of the 70s, and this then caused the market to fall until 1982 when the market started to boom again. Then markets boomed to new highs in 2000 until it ultimately came crashing back down when the dot-com bubble burst, and we saw the same thing happen again in 2008 where markets boomed until we saw that big run-up that caused the crash after the financial meltdown. In each one of these booms and busts over the last century, you had three different types of people. You had people that lost everything. You had people that sat back and just watched this whole thing happen. And then you had the people that saw the opportunity and took advantage of the opportunity to build immense amounts of wealth. It's essentially the same story every time you see a boom and a bust. It's just different characters in that story. You see people getting excited, people getting rich, people getting greedy, and then things get a little bit too big and a little bit too hot, and then it has to cool down. This causes people to get scared and panic and sell, causing people to overreact. They think the world is going to end. They think that nothing's going to ever get back to normal again. And then it gets back to normal again, and it gets even bigger than before. And this creates opportunity now for people to understand what's happening, because even if you bought at the peak in any one of the previous crashes, well, if you just held on long enough, you'd still be at a profit over the long term. Every time we've had a recession in the past, two things happen. One, assets go on sale, and number two, people run out of money. On this first part of people running out of money, the unfortunate reality is most people are never prepared for any sort of economic downturn. We saw the exact same thing happen in the 2020 pandemic. If you think into that small period of time before the Fed and the government started sending out stimulus checks and started bailing out the economy, people and businesses started running out of money very quickly because nobody or very few people had money saved up to continue paying their bills. We have the majority of America, and when I say majority, I'm not just saying this as a general term. I mean more than 50% of America does not have $1,000 saved up for an emergency right now, which means if most people lost their jobs, most people would not be able to pay their next rent bill, they would not be able to pay their car bill, they wouldn't have money to eat after a couple weeks because people are just not prepared. And so when you see an economic slowdown, which we see happen every 10 to 12 years, then people lose their jobs. And when people lose their jobs, they run into financial problems because they don't have any money. And when they don't have any money, they don't have the ability to spend. When people don't have the ability to spend, well, then the economy continues to slow even further. Now, the 2020 pandemic was a little bit of an exception because as soon as the economy got shut down and as soon as people stopped getting paid, the government worked with the Federal Reserve Bank to start sending out stimulus checks, to start sending out bigger unemployment checks, to start bailing out corporations, to do a whole bunch of things to help stimulate the economy. Now, we are paying the price for that today through all the inflation that we're seeing around us, but this is where you have to understand that generally when you see a recession, people run out of money, which means they don't have the ability to spend, and most people don't also have the ability to take advantage of opportunities that come their way because most people are too busy just trying to figure out how they're going to pay their next housing payment or how they're going to eat. The second thing that happens is that assets go on sale, and it's kind of for the same reasons as this that people run out of money. On one hand, people stop investing their money because they don't want to put their money in the markets because they're scared about what might happen, and so they keep their money in cash, and so you have less money going into the markets because people need money and they don't have the ability to put it in the markets. Second, you also have businesses that start to struggle. You see some businesses that go out of business. And when you see this pain happen in the economy, well, that eventually trickles down into the stock market because people will then start to devalue companies, meaning they're going to think that this asset, this stock, this real estate investment, this cryptocurrency, this whatever is worth less money. So they're going to be less willing to put money into it, which brings asset values down. Now, this is where I want you to do two things. First, I don't want you to be in this boat. Okay, this is why I make these financial education videos, because prior to just a few years ago, YouTube was not a source of education and financial education was not freely available. So understanding that I don't want you to be one of those people that runs out of money. So use this time as a time to prepare, to take care of yourself, to put some cash aside, to be prepared for anything. And then also be prepared to take advantage of opportunities. That way you are not one of those people that are in this boat. Second, when it comes to understanding this also creates opportunity now for people who are financially educated and prepared, meaning have cash to actually buy some of these assets. Because when assets go on sale, because when you have a good asset and people are worried about the bad assets, they will also sell the good assets at a discounted price, which means you can come in and buy strong assets on sale. And then you can just ride up the economy and see big returns because you understood what was happening and you were able to come in and buy when everybody else was selling. There's actually two ways to take advantage of the economy when you see assets go on sale. You can buy assets, like I've been talking about, or you can build assets. Most of the videos on my channel are talking about how you can buy these assets, whether they're on sale or whether they're not on sale, but how do you find a good real estate deal? How do you find a good stock market deal? How do you find a good cryptocurrency deal? How do you invest your money, whether you're dollar cost averaging, whether you're looking for an undervalued investment? How do you now control your psychology? That's all about buying the assets. But let's also talk about how do you build these assets, because the unique thing that many people don't understand is that when you enter a recession, that's one of the best times to start building these assets. Some of the largest companies in the world were started during a recession. Microsoft, Airbnb, Uber, Trader Joe's, and FedEx were all started during recessions. What happened in each one of these instances is somebody had an idea for a business and they weren't scared about what was going on temporarily in the economy, and instead of going out and taking their cash and buying some other assets, they decided to build their own assets. And the nice thing that happens, kind of interestingly, when you're in a recession is when you're trying to build an asset, well, the cost to build that asset also goes down. The reality of what happens when you see an economic slowdown is that more and more people become desperate for jobs, meaning they'll be willing to work for less, meaning now you, if you are creating jobs, you can find jobs for cheaper than you would in a stronger economy. And so people now who try to start a business in a recession actually have the advantage of having easier access to more talent, easier access to more labor, because more and more people need a job. And so now if you're starting off and you don't have that much money, well, it's a little bit of an advantage for you because you can access that labor, access that talent at a cheaper rate. Now, for those of you who are entrepreneurs, I want to let you know before we go any deeper that I created a free resource for you called Business Briefs. Business Briefs is a free newsletter catered towards business owners, catered towards entrepreneurs, that breaks down the things that are happening in the business economy. That way you can make smarter decisions in your business. We cover what's happening in business trends, what's happening with business funding, what's happening in terms of innovation. This way now you can be more well researched, and so you can make better decisions in your business. Business Briefs is completely free, so if you have not joined Business Briefs yet, I'll put the link to how you can join down in the description below. Or you could also go to briefs.co/business. I started investing in real estate about a decade ago, and this was when real estate prices were still at rock bottom, because although the real estate collapse started in 2008, real estate prices did not bottom out until 2012. And when I started buying real estate, I was doing a lot of renovations, I was doing a lot of upgrading, and not full developments, but some redevelopments. And I didn't realize this at the time, but then contractors were very easy to find because everybody wanted work. Every contractor was looking for jobs, and not only were they willing to look for jobs, but they were willing to work for cheap. And so during that time, if you wanted to get work done, it was not hard to find a contractor. Now you can compare that to today and the 2021 to 2022 housing market boom. Well, finding a contractor is extremely difficult because everybody has been hired, from people buying their homes from this housing market boom, from people who wanted to do renovations, from people who are flipping properties. Every contractor is booked, and every contractor wants a premium because of how busy that they are. So it's a completely different market, and you can see that when everybody has money, it's harder to find labor. It's harder to find people to work, and then you got to pay a premium to find people. But when you see the opposite, when you see a recession happen, it's a complete flip in the economy where now it's the workers that become more desperate for jobs. And this is where I want to caution you a little bit, because a lot of times people don't want to think for themselves as to how they can become financially successful. They just want to follow a proven path. And what they do then is they look at what successful people did and they try to copy that. But when you look at what a successful person did 10 years ago or 20 years ago, it's going to be very different than today. Like, I started in real estate 10 years ago, but there's no way that I could have started in real estate today the way that I did 10 years ago, just because the cost of buying real estate today, the cost of doing renovations today is significantly more expensive. And when I was getting started a decade ago, I didn't have that much money to start investing in real estate. There's no way that I'd be able to do today what I could have done 10 years ago. And this is where now, instead of just trying to copy what somebody else did, you have to be able to find the opportunities around you today. So what does that mean exactly? Well, when it comes to buying assets, it just means looking at the different opportunities. You have real estate opportunities that might come your way, stock opportunities that might come your way, cryptocurrency opportunities that were not there a decade or so ago, that are new, that could create opportunities. And so now it's just a matter of looking at these different asset classes and finding the different opportunities there when it comes to buying, and not just being focused on one sector of one asset class. But when it comes to building these assets, it's very different now, because nowadays a lot of businesses are done on the internet, and the way business is done is changing. Media is the new backbone for every business, and the people that understand this are going to become incredibly wealthy over the next decade, because now not only will you be able to monetize your own business, but you can help other businesses monetize their businesses significantly better, because now everybody is trying to understand, how can we gain scale on social media? How can we gain scale on the internet? Because the internet is a new form of digital real estate. YouTube, Instagram, podcasting, Facebook, TikTok, all these things are a form of virtual real estate, and the companies and people that understand how to secure a piece of this digital real estate are going to be able to become incredibly wealthy over the next decade. Like, we've only started to see more advertising dollars start hitting the internet as opposed to TV in the last couple of years. And so now what we're going to be seeing over the next decade is more and more money, more and more businesses, more and more customers doing things on the internet. And the people that understand now how to build these assets using the internet are going to be able to become incredibly wealthy over the next decade, because media is going to be the backbone for businesses. It never existed like that before, because back in the day when a company created a product, all they did was focus on creating that product. Then they would outsource marketing to a marketing agency, and then the agency would go and buy billboards, they would buy advertisements wherever, they would buy TV commercials, radio commercials, which would then send traffic to the business. Nowadays, it's so much more efficient for businesses to have a presence on social media, because you can go viral on social media for effectively free, which means that now you can grow and scale your business at a much lower cost, and the cost to start a business is next to nothing, because all you need is a website, you need a domain, you need an LLC or an S Corp or whatever, depending on what your attorney says, and now you have a whole business opportunity right in front of you on your fingertips. Now, when you're trying to build this asset, you're trying to build your company, you're trying to build the equity in your business, there's two concepts that you have to understand. You have to understand your product, and you have to understand the customers. Your product can be a physical product. You can create a whiteboard, you can create markers, you can create a book, you can create something physical. You can create a digital product. This might be a software, this might be a technology, this might be an app, or you can create a service. Maybe you're a coach, you're a consultant, you have some sort of other digital service, maybe a digital class that you can offer people. But you need something that you can sell. And even if you don't have something that you sell in exchange for a dollar, maybe you have media. Now, I'm not saying now using media as your business, you're using media as your product, where now you have something. You have a newsletter, you have a blog, you have a news site that people come to, and then you can sell advertisements on your media. Now, starting a YouTube channel and you making videos is kind of starting a media company, but it's not a company if you're the only one making the content, because now it's a sole business that's reliant solely on you. You can't sell that company, and it's really just you creating your own job. Now, it's not a bad thing. You can create a great lifestyle. You can make millions of dollars doing that, but if you really want to build a business, you're going to have to think a little bit differently than just you making the videos yourself, but it can help you fuel your business. Like, I make videos here on Minority Mindset, and these videos here that I started off as a hobby now fuel my businesses. I have Briefs Media, which is my newsletter company. You just heard me talk about Business Briefs, which is one of the newsletters that I have. But then I also have Market Insiders, which is a financial coaching platform that I own. Once you have your product, that's when you need customers, people who are actually going to buy your product. And this is where the internet has completely changed the game, because back in the day when you started a business, you started with the product first. You had to create something, invest your time, effort, and money to create a product. Then maybe you needed a physical location, but let's just ignore that. But you spent the time, effort, and money to create this physical product. Now you got to go out and search for customers to actually buy a product. The internet has completely flipped that, where now you can find the customers first and then create the product second. This is one of the things that I did. I started making videos here on YouTube just for fun. I was working on other businesses, working on other investments at the time, and I started making videos here because I got screwed over at a company that I was working on, and so I made videos for fun. I didn't even know how to monetize my YouTube videos. I had no idea how to talk in front of a camera. But then my channel started to grow. And I started to really enjoy making these videos talking about financial education. I was in a completely different industry before. We're talking about textiles. I was working in the sock business, athletic socks. And I really enjoy the financial education space, talking about financial education and entrepreneurship. And this started to grow. And then this gave me the idea to then transition into more of the financial education and news industry. So that's what I did. I created Briefs Media, I created Market Insiders, and I used the revenue from my Minority Mindset videos to grow these companies. And I also used the audience from my Minority Mindset videos to grow these companies. And so now you can use social media as a way to get the customers first, to get paid to get customers, and then funnel these customers into your product. It has completely changed the way that business is done, but it requires you to work a little bit backwards. First, you have to understand the whole financial education aspect of the different ways that you can earn money. You understand, okay, you know what? I am going to build my own equity. I want to build my own company, understanding how you need a product and customers. And now because of the internet, because of this new economic landscape, that you can start by creating customers. You don't got to start a YouTube channel. You can start an Instagram or TikTok. You don't even have to show your face if you don't want to. There's an unlimited ways to do social media. But now you can work to gather your customers by building some sort of brand on social media. Then you can use it to build your product. Now you work on building your business, and this shows that now you can build your assets, which allow you to take advantage of whatever opportunity you're in. You can do this whether you're in a recession or not in a recession, but now all you're doing is you're starting to think a little bit backwards and understanding how the opportunities in this economy have completely changed as opposed to 10 years ago. Because 10 years ago, these opportunities were not there. And so it requires you to think a little bit different, understanding what are the opportunities there, but it's also that basic level of financial education of understanding how do people become wealthy. Well, people own assets. There's two ways that you can own assets. You can buy the assets or you can build the assets. Building the assets requires you to be an entrepreneur. Not everybody is interested in being an entrepreneur. Not everybody is interested in operating a business. Not everybody is interested in being a business owner. However, if that's something that you're interested in, I 100% support you. If you don't want to be an entrepreneur, well, then you can buy the assets, and you can buy more assets when things are on sale. When are things on sale? When you have an economic slowdown, when you see a recession. That's when we want to make sure that you're even buying more aggressively, because now the good assets are on sale. And if you're buying more, well, that allows you to build your wealth quicker. On the other end, if you want to create your own equity, well, now you can build it. How do you build it? You need products and you need customers. Nowadays, you don't have to spend tons of money building a product. You don't have to spend tons of money building customers, but you have to understand how do you attract the audience? How do you attract the customers first? And if you understand the way that new media is dealt with in this economy, that can allow you to grow your brand, grow your audience for free, or even get paid to do so, and then you can leverage this audience to help you build your products, which then funnels this entire thing. But it requires you to think a little bit different. Like I say, think like the minority, not like the majority. That way then you can work to build your own equity, build your assets. That way you can create your own wealth. If your goal is to start a business and you want to make $1 million a year, that means you divide that by 365, you have to make $2,739 a day in revenue to build a business that's making you $1 million a year. If your business doesn't operate on weekends and holidays and you're only working Monday through Friday, well then now you gotta take this $1 million and you gotta divide it by 261, because now we gotta take out weekends and holidays, which means you have to make $3,831 a day if you want to make $1 million a year in your business. If you want to make $100,000 a year, just remove 1 0. If you want to make $100,000 a year here, you got to make $273 a day. If you want to make $100,000 here, that means you have to make $383 a day. The question now is, how do you start from $0 and take that to $273 a day or $383 a day. What do you do? Where do you start? If you want to start a business and you don't have a business idea and you don't have access to capital, you can't go and raise money somewhere, the first thing you got to do is you got to get some cash quickly. And the easiest way to do that if you don't have a lot of money to start is by using your services. Go out and start detailing people's cars. Go out and start mowing people's lawns. Go out and start helping people with stuff. This is an easy way for you to go out and start generating some cash. That way you have some cash to invest in your business, even if that means being able to now afford building a website or registering your business or filing whatever licenses you need. If you don't know where to start, just take a look around you in your home. Start by selling some of your clothes or some of your old furniture or some of your old electronics. Everyone has stuff in their homes, and it's an easy way for you to generate at least a few $1,000s because you have this extra stuff sitting in your home that you're not using. Just take it and sell it. Now you got some extra cash. Once you do that, then you got to figure out what kind of business you actually want to start. And this isn't always the easiest thing to do because people make it kind of seem like you're just gonna be able to find your passion and know what you want. But it took me a lot of different business tries to figure out what I liked and what my passion really was, because my passion changed so many times and what I thought was cool changed so many times. But this is where you have to learn to be resourceful, because so many people make it seem like if you want to start a business and if you want to build a big business, you need a whole bunch of money to start. That you cannot start a successful business unless you have resources and unless you have a whole bunch of cash in your pocket. But that's just not true if you have the ability to think and be creative and be resourceful. When I was in high school, I would spend my weekends working at Indian weddings, and I would work with DJs, and I would play an instrument called the dhol, which is a native Indian Punjabi drum. And so I would play this drum at weddings, and I would make a little bit of money, but I got to know a lot of the DJs. And one of the DJs in the industry said, "Hey, you know a lot of people, you're in high school, how about you and I work together to start hosting teen parties at a local restaurant?" There was a new restaurant that popped up in our city, and this restaurant was looking for some exposure and they were looking for some brand awareness, and so they were willing to work with us to allow us to host parties there in exchange for us promoting the restaurant. And us promoting the restaurant doesn't cost us any money, so I figured, hey, let's do it. Now we had a venue to host the party, which was the restaurant. We had a DJ to provide the music, and then we had me, the promoter. I didn't have any extra cash to throw into this business idea, and my parents were not about to give their son some money to throw into this dumb business idea when I should be studying, and so we had to get creative. The way that we would make money is that we would charge people cover or a fee to get into the venue, but we did have costs before the party started. Like we needed to pay for security, we had to pay some money to marketing to create some flyers, and so the DJ agreed that he would front the money to do these things, which was maybe a few $100, and then the money that we make from charging cover would first pay off these expenses, and then whatever money is left after that, we would split 50-50. The DJ would take half and I would take half. My first party when I was in high school ended up being huge. So many people ended up showing up because they were curious about what was going on, but we were not ready for that, and so it was just me and the DJ working, and the DJ had to work at the DJ booth, and I was the one trying to collect cover and run everything else. And so because I was running around, a lot of people got into the venue without even paying to get in. By the time we got to the end of the night, everybody had a great time, and now we had some cash to count, and now we're counting the cash, we paid off the expenses, and then we finished counting out all the expenses, and then we were left with a whole $4. $2 for the DJ, $2 for me. We had spent weeks planning the event, preparing for the event, and getting everything ready, and now to reward ourselves, we had a whole $2 each. But this was the start of something a whole lot bigger for me, because when I got to college, I saw that everybody around me in college was partying. But I didn't drink, I wasn't into partying, I just liked the hosting side of it because I liked the business side of it. You know where this is going now, right? So now I'm in college, I see everybody partying, but I don't want to spend my time partying, so I'm a freshman in college, and the first thing I do is I start knocking on the doors of all the clubs and venues on my college campus, and I ask them, hey, what can I do to host a party at your venue? The first club I go to says, no problem, just pay us $10,000 and you can have the venue and host your party and do whatever you want. I didn't have $10,000, so that was not going to happen. I go to the next place, they didn't answer the door. I go to the third place, they said, sure, you can do a party here, and all you got to do is give us, the club, 50% of the cover that you earn. Now it's the exact same thing as before. I didn't have to pay any money to get the venue. I know a whole bunch of DJs, and they were all willing to work with me on a 50-50 commission. So half of the revenue would go to the club, and now we have half of the revenue left. Half of this now remaining revenue would go to the DJ, and the other half would be mine. So yeah, I didn't get to make all the money that I could have, but it was an easy way for me to get started without putting in a whole bunch of cash, because now I have everything I need. Now all I gotta do is do the marketing, and because I'm in college, everybody's all around you, so I would spend a few $100s to print 5,000 flyers, and then I would stand on the street on my college campus passing these out, and I wouldn't stop until all 5,000 flyers were gone. This business grew very quickly because word spread fast about how much fun people were having at our events, and second, it was easy to start with very little cash. So the first thing you have to do if you want to be able to build a successful business is you have to be resourceful. If you are not resourceful, you will never be able to build any sort of successful business. This is not something that you can learn how to do in books. This is just something where you have to be aware of what's around you, and you have to start using the resources around you, because this is what will allow you to be able to build a business using whatever you have around you. The easiest way to make up for your lack of dollars is just to increase your hustle. Now when you start making a little bit of money, the next thing you're going to start thinking about is scalability. How can you take this little bit of money that you're making and scale it into something a whole lot bigger? And this is where you have to understand the difference between just owning your own job and actually running a business. Because the issue that I had with this party promotion business was, one, I got sick of the business because I didn't really like the industry, but second was it wasn't scalable, because the way it worked is, yeah, I made good money. I can make a few $1,000s in a weekend. But if I wasn't hosting an event, if I wasn't there working, I wasn't gonna get paid. When we talk about building a business, not just owning your own job, when I talk about building business, I mean you own a machine that will continue to produce revenue or to produce money even if you're not physically working, because either you have other people working that are continuing to run the machine, or you have a system, which is very important even with other people, is you need to have a system where this business can run even without you physically working. When we're talking about a business, you have to understand that there's two parts to every business if we're talking about building a real business. You have the owners, and then you have the employees. And so what you need to understand is when you are building a business, you are both the owner and the employee. But what you don't want to do if you're talking about really building a business is get stuck into understanding that you are the only owner and the only employee. See, when I was running the event planning business, I was making decent money. I was the owner of the business, I was the only employee, and so anytime I made money, this was money that was going into my pocket. But there's a difference between the money you earn from working in the business and the profit that your business makes. Because if I had paid myself just a regular salary, then now if I cut myself out, if I hired somebody else to take my position working in the business, then there wouldn't be really any profit left, because now all the money is going to pay the salary, and the owner, who in this case was also me, but if the owner was someone else, then the owner would be left with nothing. Let's think about it this way. I create a guacamole business that is now doing $1 million a year in revenue. I started the business myself. I created this guacamole recipe. I started selling it in stores, and now stores around the country are carrying it, and I'm doing $1 million a year in revenue. So what's happening now is I'm making $1 million, but then I got to pay my expenses. I got to buy my avocados, I got to buy the salt, I got to buy all the other stuff, and all my expenses are costing me, let's just say $500,000, which means now I am left with $500,000 a year. But all this $500,000 is a profit because now I have to pay myself, and for the purposes of this example, I'm going to assume that there are no other employees in this business. So let's assume that I'm the only employee, I'm the only owner. And so now if we talk about the profit, which is the difference between what the owner gets and what the employee gets, I have to pay myself as an employee of the business, as a CEO or whatever. I have to pay myself a salary. So for the sake of this example, let's assume that a person in this position, if I had to hire somebody else to take my role in this job, I'd have to pay them $200,000 a year. So now this is $200,000 for salary, which means the business is making $300,000 of profit because I had to pay somebody, in this case it's me, $200,000 to run the business. This is the difference between running a business and just owning your own job. Because if you're running a business, now what you can do is you can find somebody else to take this job and you can own the business. You don't have that ability to do that if you are just running and owning your own job. So when we're talking about being able to scale a business, you have to understand that in order to build a real business, you have to have a business where you can pluck yourself out of the equation and have somebody else come in and do the same job. And you got to understand that, hey, this person is going to want money as the employee. Right now, you might not be paying yourself a salary because whatever is left in the business account is just money for you, but that's not how you want to be thinking if you really want to build a scalable business. You have to understand that if somebody else was in your shoes, how much money would they charge as a salary? Now you pay yourself that as a salary, and whatever's left is the profit in the business. Once you can separate these two things, Now you have the ability to build a real business because you understand that, hey, somebody else can take your spot and you can still be the owner of the business. The second thing that you got to understand about scaling is you want to be able to have a product that allows you to scale your brand. I'm going to focus in on the internet here because the internet has changed the way that business can be done now, and it makes scaling your business so much more accessible. Now, just because it's more accessible doesn't mean it's easy, but scaling and building a business is so much more accessible now because you can reach millions and billions of people around the globe thanks to the internet. Every single business in the world needs only two things in order to be able to survive. And I don't care what type of business you're talking about. If you want to build a successful business, whether it's making $100,000 a year or $10 million a year, you have to have these two things if you want to be able to survive, grow, or thrive. You got to have a product and you got to have customers. If you have a product that customers are buying, now you have a successful business. But if you have a good product that no one's buying, well, now you don't have a business. And likewise, if you have customers who want your product, but you have nothing to sell to them, well, now you're not making any money and you cannot build a business doing that. This is at its core what building a business comes down to. You need a product to sell to customers and you need customers that want to buy your product. This is something that you have to figure out. What is this product that you want to create? What is something that you can create value in that people would want? Once you create this product, now it's a matter of finding customers. And now thanks to the internet, the most accessible way for you to find customers is to open up an Instagram page. It's to start a TikTok channel. It's for you to start a YouTube channel. It's for you to start a Facebook page. Something where now you're putting out content where you can educate people about your product. So now potential customers can see your product, and if they like it, now they have the ability to buy your product. Now thanks to the internet, if you have a product, you can get customers to buy your product 24 hours a day, 7 days a week, and you don't got to worry about paying rent to get your business started because now people can come onto your online store, people can go onto your website any time of the day from anywhere in the world, any day of the week. You don't need to start off with a sales rep or a customer service rep to service every single customer. It's all digitalized, it's all automatic. And so now you have the ability to scale a business idea assuming that you have a product if you know how to find the customer, and this is all digital marketing. So you can see there's so many different verticals here. First, you gotta know how to create the product. This is innovation. What do you want to create? What do you want to do? What are you good at? Then, how do you find the customer? Well, now this is digital marketing. How do you find customers on Instagram? How do you find customers on TikTok? How do you build a blog? How do you build a YouTube channel? There's so many different verticals that you can take here, and if you don't want to go that route, then you can look into how do you do paid advertising? How do you create viral messages? How do you create a message that people will want to share with their friends? And how can you run an advertisement profitably on Facebook or Instagram or whatever? Once you can figure that system out, then it's all just a numbers game. If you can make $27 of profit for every product that you sell, and you sell 10 of these products a day, well, now you will be able to create a business that's generating $100,000 a year in revenue just by selling 10 of these products a day. If you want to take it up to $1 million a year, well, then you're going to need 100 sales a day, and that's going to take you up to 1 million. But now it's just a numbers game. How do you take it to 10 products a day? Once you can figure that out, now you come up with new marketing ideas. Now you come up with new product ideas. How can you scale it to $1 million a day, right? It's all baby steps. First thing you got to do is you got to learn to sell one product a day. Once you can sell one product a day, you can scale this up to sell 10 products a day. To go from 10 to 100, now you might want to create a second product. That way you can make more money per product, per sale, because now people might be buying 2 products every time they buy something. And now you might be coming up with new marketing messages, new creative ideas to access more people and to get more eyeballs on your product. If you want to be an entrepreneur and you want to start a side business or you want to start your own business, don't let someone tell you that you don't have the ability to do it because you don't have the cash or the experience. All you need to do is you got to first be resourceful. You got to know what you want, and then you got to put in the puzzle pieces to make it happen. It is not easy. It's not going to happen overnight. Starting a business is a lot of work, and it's not for the vast majority of people. But if it's for you, you got to go out and make it happen. Find the way to put the pieces together, and then you'll be able to create your own success through that. And the person who pays the price disproportionately are the poor and the financially uneducated, because now you have to pay for inflation. Your wages don't stretch as far. Your savings don't go as far, and now your cost of living is significantly higher. So you're becoming poorer each and every day. Inflation hurts the poor. And the reason I'm not even talking about the middle class is because inflation is the reason why the middle class is getting wiped out.
It's turning into more poor.
It's turning more to either